So it's best simply not to trade wave 3s. And so what I'm saying is that this wave shape is very much in character with the euro to US dollar market. And wave 4s in the euro to US dollar tend to be good, profitable waves. Now, here we've got two good wave 4 shapes. So that's what I do after having a look at an analysis, is I have a look at the wave shapes. And the wave shapes in this analysis look good to me. I'm going to show you another analysis in a moment where the wave shapes don't look so good, which is one reason why I'm not so pleased with it, and I would choose not to use that analysis in my trading. Okay, having looked at the wave shapes, let's go back to the daily chart and let's have a look at our wave shapes. I've just been speaking about the wave shapes. You can see those two wave shapes that I showed you were bull B and then a bull E in the 40-week cycle. A very good way of determining whether an analysis is good is to perform a really simple task. And let me zoom in to get a little more detail in here. You perform a really simple task and you see whether visually the troughs do in fact line up with prominent troughs in price. So we start with the long troughs. There's an 18-month trough. That lines up with a good trough in price. Here's a 40-week trough. That lines up with a very obvious trough in price. And an 18-month trough, also an obvious trough in price. Let's look at the 20-week. So far, so good. That's a good trough in price. That's a good trough in price. And so you go through the cycles. Now, there's an 80-day trough, which is highlighting that trough in price there. And it's not very prominent, but at some point, you obviously are going to have less prominent troughs. Let's look at the other 80-day troughs. There's a good, that's a perfect example of a straddled trough. If anybody doesn't know what a straddled trough is, I'll be happy to explain it. Perfect example of a straddled trough in the 80-week cycle, in the 80-day cycle, I beg your pardon. Here's another 80-day cycle. There's a trough in price, not very prominent, but fairly prominent. Here's an 80-day trough in price, also quite good and prominent. And so you go. Let me cut to the chase and show you one that doesn't look very good. Here's a 40-day cycle trough, and that doesn't look very good. So let's clear the whiteboard. Let's zoom in a little bit, and we look in a little more detail at this section, and turn on the whiteboard again. And you can see here is the 40-day cycle trough in the analysis, and there it is in price. Now, one of the things that many people find difficult to understand and to grasp with Hurst cyclic theory when they start analyzing markets according to Hurst cyclic theory is they don't understand how a trough of a 40-day cycle can be so insignificant in price. Most people say, surely, after a trough of the 40-day cycle, that means that price is going to rise for 20 days. Isn't that definition of a cycle? After a trough, it causes price to rise for 20 days and then fall for 20 days. Yes, but according to her cyclic theory, we have to consider multiple cycles, and we have to combine those cycles. So it happens often that you get a trough of the 40-day cycle, which looks fairly insignificant in price. Okay, and that forms what is also what is called a straddled trough. So here is yet another example of a straddled trough. The concept of straddled troughs are very, very important in Hurst's cyclic theory. So yeah, well, let me not dwell on that. If anybody wants a full description of a straddled trough, I'd be happy to provide one. But perhaps you all know what a straddled trough is. At any rate, this is not a reason to discard this analysis out of hand. A straddle trough is a perfectly acceptable part of an analysis based on Hurst cyclic theory, and so I'm not going to dismiss this analysis. As a matter of interest, this business that I'm doing now of lining up the troughs with troughs in price and seeing just how well matched they are, can be performed in a much quicker and better way by seeing whether you can find any inverted wave shapes. Inverted wave shapes are a way of telling you that, in fact, troughs in the analysis are not lined up very well with troughs in price. So far, I cannot see any inverted patterns. You can see the patterns described at the bottom of this chart. I expect we'll see some inverted patterns if we zoom in here. No, still not a single inverted pattern. And if I keep going through the chart, I can't see an inverted pattern. They're very easy to see because they're written. There's an inverted pattern. Okay. So a very good way of getting an idea of how good the analysis is to have a look at where your inverted patterns are. Now, these inverted patterns start appearing at the 20-day level, right? That's the 20-day cycle. For them to start appearing at the 20-day level is a sign of a very good analysis. Things are very well resolved. The other thing that you'll often find when you get an inverted pattern is that because Hurst analysis is a fractal and you have nested cycles, when you have one inverted pattern, you'll often have inverted patterns all the way down to the shortest cycle. So that's what's happening here. You get inverted patterns often in pairs or triplets. Okay, so you can look at inverted patterns. So all the things I've been doing so far have been a matter of sort of going through the chart and studying it and everything. What happens if you don't really have the time for all that? Well, there's a much easier way of doing it. You go view sentient wave shape statistics. Now, I don't know if you can see this because this type is pretty let me put it center screen. But you can see here how many inverted shapes there are. If we add that all up, there are 61 bull A's, 82 bull B's, 16 bull C's, and so on and so forth. Okay, if I add that all up, it's about 250 roughly bull patterns. And how many bear patterns have there been found in this analysis? 120, 200 and something bear patterns. How many inverted patterns have been found? 2 plus 6 is 8, 9, 10, 12 inverted patterns have been found in the entire analysis. Okay? 12 inverted patterns have been found in this entire analysis. There are 250 odd bull patterns, bull shapes, and there are over 200 bear shapes. That is an indication of a good analysis because it has very few inverted shapes. Okay, so that's one way of reinforcing your confidence, if you like, in the analysis the Sentient Trader has performed. What's another way of doing it? Go to Tools, Show Phasing Information. Gives you a big warning message, which we're not going to worry about because it's not a very long analysis. I'm going to copy and paste this into a text file. Maybe that'll make it easier for you to read. This is a rating that Sentient Trader performs upon the analysis. It tells you that the trough isolation average is 640. Now that is obviously not a percentage. It is a number that can get very high. So there's no absolute value. You cannot say you cannot answer the question, what is a good trough isolation average? That figure is used for comparing different analyses. And I'm going to show you another analysis in a moment, and we'll compare that figure, and we'll say, okay, which analysis is better? Okay, the trough isolation average basically gives you an indication of how isolated are each of these troughs, which is exactly what I've been trying to show you visually. Okay, I've been saying, how prominent are the price troughs compared to the troughs in the analysis, and the trough isolation average, that figure there, is a rating which gives you that number. VTL confirmation percentage is the next one. Tells us Sentient Trader goes back through the entire analysis. It constructs VTLs for each and every cycle. For each cycle, trough and peak, where it can. VTLs cannot be constructed for every single cycle for various reasons, which I won't go into here. Then it says when price crossed that VTL, how often was the target as a result proved, or at least the trough that was confirmed as a result of the VTL. It's a VTL confirmation. So when a trough or a peak was confirmed by that VTL being crossed by price, how often was it correct? The answer was 100%. Okay? You cannot get better than that, obviously. That doesn't mean this is the most brilliant analysis that has ever been made in all Hurst living memory. VTL confirmations often are very, very high. And the reason for that is because VTLs are very closely based upon the analysis, and VTLs tend to be self-confirming tools. They are cyclic tools. They tend to be self-confirming. They're very closely based on the analysis, and so when a VTL is crossed, it's no surprise that the confirmation percentage comes out very high. 100% is of course the highest it can be. It's usually a little lower, but it is often very high because they tend to be self-confirming. I see a question. How do you find patterns that are forming in the short-term intraday and overlay that short-term view with a midterm, long-term view? All right. Let me try and speak about intraday for a moment. After this, and can you show us a chart on how you would day trade with Sentient? Okay. Yes. Let me do both of that. So let me finish what I'm speaking about here, and then I'll take a look at things. Intraday. All right. Then the next figure is the FLD confirmation, which is a percentage again. How often did FLD interaction with price confirm what the FLD was saying? 65%, fairly good, not very good. Nominal deviation from the nominal model, 2%. That's pretty good. Obviously, the smaller the better, because you expect it to be close to nominal. And the cycle regularity is 63%. How regular are these cycles? 63 is a little bit low. You would hope to have higher than 70% regularity. Okay, so those are various ways of taking a look at the analysis that's been performed and comparing them. Let's, because I'm going to try and squeeze in a discussion about intraday and day trading. Let's move ahead and jump forward a little bit. And see if I can point out something about this analysis. There is a reason why this analysis might not be a very good analysis, and let me show you why. And in order to do that, I need to plot some FLDs in the chart. So let me plot an FLD.